Greetings, market rebels. Welcome to this week's sector situation video. It's the first sector situation, obviously, of 2023. So I want to wish everyone a healthy, a happy, a prosperous, a wonderful new year. I hope everyone has a great year. And we'll pick things up. And this really shouldn't be too long versus how I usually run. Here's our trusty disclaimer. And then here is our trusty intellectual property rights notice that everyone needs to take a quick look at for me. Thank you very much. But welcome to this week's sector situation. And the reason why this will probably be on the shorter side is because, and I hate to be this way sort of, but I know folks are looking a lot of times looking for where are we going to go this week? And that's why we try to do this, right? Try to lay out scenarios and discuss what could happen if certain levels get exceeded and held. But last week, we called it a tough call. And we said, boy, on the market, I'm not sure what's going to happen. Let's just take it as it comes. And quite honestly, as I noted in macro measure, it was really the right way to look at it, I think, again. And I think we probably said that 3 or 4 times maybe in the last several months or last half of a year, and they've pretty much been right, because there wasn't a lot to work with, and you got to wait for things to develop. And let's face it, right, this is a consolidation, and sometimes the markets are stuck in a consolidation. They're not trending, and they're a tough call. And again, that's where I am on the market. I hate to be that way. That's where I am on the market this week, just to set the table for the sectors. I think it's tough. I think you've got to just wait it out, let things start to develop, go for signals and doubles as long as we're in a narrow range. And then let's see where they really begin to take things. And remember, the market does have basically a whole month before it has to face the music of the Fed again. And so here's a chance for the market to do things on its own. At the start of macro measure, the other video, I noted several different things that this kind of weigh on me, and Ryan's included those in the newsletter in Market Outlook. It will be in all the newsletters this week. I would take a look at that. I'm just encouraging folks. I'm not going to belabor that, but I would definitely take a look at that because, think about where we are and think about these arguments for this soft landing. I'm not a great macro prognosticator or an economist or anything like that, but I will say that I just don't think that an economy and a consumer that's so debt dependent is going to do well with rates continuing to go up. They're set to go up a little bit more, at the very least. And so I don't see how people are going along with the soft landing call already. Maybe I'm dead wrong. I hope to be. I hope things continue to go well for as many people as possible in our country. But I don't see that evidence that things are. I think a lot of things are still going to hit the tape that are going to be pretty poor, as a matter of fact. So we'll see. Hope to be wrong on a lot of that. But the reason why we're kind of setting the table there macro-wise, the reason why I'm kind of short on, I don't think we have a lot to talk about, is that the market itself just isn't in that position where you're ready to go rip roaring hotly higher or really start to descend. I will note, and I talked about this briefly in macro measure, that a lot of these leadership sectors like XLP, XLB over here. Let me see if it lets me get my arrow. I'd rather y'all be looking at that. No, it's giving me the old drawing tool on that one. I think it's because I left it in here. Let's see if it lets me just switch back to arrow. I better not leave those with the line. Yeah, there you go. But if you look at, maybe, no, it won't keep it, unfortunately. But over here, XLB, here, XLP, I'll click on this one. Over here, XLI, these and XLV, these were leadership sectors over the last couple of months, and they're all flashing, I think, something akin to a possible bear flag. And I drew this here in macro measure, and you can see what I mean, right? You've got the drop here, you lose the trend there, first of all, and then you get the drop below it. And let me get the arrow to make this a little bit better, but I'll just illustrate this on this one. There's the trend, drop below trend, try to drop significantly, try to bounce up, get reversed hard, and now you're back here again, came to back here again. So this could trace out a little bit longer and start to change everything. But as of right now, the real estate sector down here, right? I'll click on this one. There's a real estate sector. A lot of the things that were doing well, XLI, XLB, XLP, even XLU over here, a lot of these on this side have just, including XLB, have the healthcare space. They are now flashing, I think, a pattern, not all the technicals, but a pattern that's a little more concerning at this moment. So just stay on top of that. On the flip side, things like discretionary right here, if it lets, I got to get this arrow back here. It'll teach me to think I can use an arrow everywhere when I can on this grid. But this is a little bit better, clearly, right? But that's Thursday, Friday action. How much that was the post-tax loss selling? How much of this is legitimate, right? How much of that is just like a little bit of window dressing? Who knows? Or people trying to front run something? But the reality is, like the transports over here, this one, and then discretionary, and the financials, they all look a little bit better, right? So they were not doing so well the last few weeks, and now they're doing a little bit better. So is tech over here, XLK over here, and then communications, even, which were a big loser, are doing better. So I don't know if that's going to sort of be like the dogs of the Dow trade to get the year started, so to speak, where beaten down sectors start to find a bid a little bit to start the year with people that want to place capital in there. But it's worth noting, right? We don't have a situation where it's all risk off or risk on. What we're seeing is a little bit of, it looks like, let's get out of sectors that have ran and maybe run into sectors that are maybe about to run. But I think you can see the difference on these charts, that these are, some of these seem a little more poised to want to try to run right now, while some seem like they're in kind of enmeshed in a pattern that is often pretty darn bearish. In other words, if you break down out of this flag in some of these bear flag names like XLP, XLRE, etc., those are usually pretty reliable. I mean, I would say they're probably 70% reliable, where if you start breaking out of here, you should get a pretty decent move lower. So just keep an eye on that type of stuff right there. Now, cyclically, what I'm going to do is go through each one on a larger chart, a couple other things, and we'll see where things are cyclically as well. I'll try to mention that for each one of them. Let's get a good 6-month view here, and then we'll start out with the old, let me just move this over and out of our way. Where is it? Right there. So we'll go through these kind of methodically. Looks like I've got some kind of one of my sectors, I guess I bumped by mistake. Oh, XLE got bumped. Yeah, my bad. XLE, I think, looks a little bit better, so we'll cover that first. So this was, I think, looking a little bit better, and now it's still kind of a little tricky here. XLE, it's still looking a little bit better. You can see the long-term trend is still up, and it did have corrective action, and fortunately, I think we were able to kind of talk about that at the right time, where we saw some paper, we saw a diamond-esque pattern, we saw an overcrowded trade, excuse me, and it started to correct, and now it's consolidating. They're trying to push it up and through. So I think you get above the 50 there, especially if we see some UA. And when XLE's been running, energy's been running, we have seen a good flurries of UA activity, and that's always encouraging when the charts and the sector, the individual stocks, and of course the UA are all saying this goes higher. That's always a good thing in my book. And so anyway, this would be real close to the 50, get back above there, especially with paper in a solid market. I would be ready for that. But I think that looks a little better. You can see the 10 in white is about to cross, or is threatening to cross, the 20 there in light blue. And so that's a little encouraging thing. I'm not a big moving average, crossover guy, but that is something that some people really like to look for. XLF, the financials, I think you have to say, right, they've kind of hung in there relatively well. Obviously the last been rough. They've kind of hung in there better than, say, tech, and it really wouldn't take much to get financials above the 20 and the 50. And so cyclically, they're a little bit inbound on, like, I guess you would say they're a little bit balanced out, but I'd say that I'd give the slight nod on the cyclical side to the time cycle side to the bulls. So I think the bulls have the edge a little bit in XLF and I think XLE. Let me just double check that before I confirm it. Yeah, XLE definitely. I think the bulls are, if I had to go with it, I'd say, look, bulls are still there. They're still in control as of now. They might be a little bit too in there, which is my concern, that it's a little overcrowded. But overall, right, you've got to just at the end of the day, you've got to call it as it is and as you see it. And I think right now, I'd give the nod to the bulls in energy until proven otherwise. If they can break it back out above that 50 we looked at. As far as communications go, I think these are looking a little bit better. That they found this sort of cluster lows that it's trying to put in here. It's a little bit higher than here. It wouldn't take as much of a run to get above the 50 and 20. That's good, but you can see the long-term trend is still down. There's no way around that in communications, but there's some encouraging signs, so it's more balanced. However, I would say at this moment in time, as long as this thing is tamped below the 50 and probably you'd have to say the 100, as long as they keep it tamped below there, I would say the bears are still in control, right? So overall, I need to see more out of the XLE to get me to go bullish, unless I'm going to put a counter trend trade on a really short-term leash. So I just want to make that clear. XLF, the financials, let's go back and take a look at these. So again, I think these look pretty interesting. I think this is a little bit sort of imbalanced, but I think with a little bit of push here, it could quickly become in control of bulls in a substantial way. So this would be one that I think is worth watching. If the market starts to lift and it lifts along with it, it's not a big mover clearly, but clearly you can still do well in it. We still trade it through UOA a lot because we see paper in this thing, and we see a lot of big bank paper as well at times. But this is close if it can get above that 50 to start doing better again in a market that's acting constructively. But I think that looks better than a lot of other things that are out there. Even transports, which we were noting, I think lately, how they've been struggling again. They still look rough on your SMA complexion with virtually all SMAs downsloping, but they're trying to round up a little bit. I'll pull up this. You can see the RSI is trying to show a little bit of improvement on that low, and that low is very similar to the lowest low, and it's certainly higher. I should say lower than this low where the RSI was slightly lower. So there's a little bit of positive divergence happening there. I'd still rate longer term downtrend, still SMAs pretty much down sloping. Again, if you go counter trend there, you got to keep, in my book, you keep the counter trend trades on a short leash until the trend reverses. Then you're welcome to get more aggressive with them in that direction. But as of now, a little bit of positive stuff happening there. You probably need to use Thursday's high to get yourself in that one, and then maybe see what happens from there. But again, this is not a big trader. It's an important sector, right? But not a big trader. So yeah, I mean, I would do that, or I would just say, look, if it closes, I think it's going to close below Wednesday's low, that's a problem. That's starting to get worrisome. So those are your levels on something like that to keep an eye on. I don't want to belabor this and draw all this stuff in. If I draw it in advance, then a lot of people don't like that there's so many lines. So it's not a really easy thing to win or lose at. You can probably only lose with some people on how you decide to handle things. But look at XLV, right? This one has that. I think this has that kind of corrective thing in place still. And remember, this was really a good performer, as you can see, for a very long time, kind of bucking the market's trend. And now it's sort of in this maybe a triangle, but also maybe more of like a bear flag. So if it loses that 50 there in gold, definitely be on the watch for a trip down towards that 200 in purple. If it takes out the 20 there in blue, I would say in a constructive market, I mean, that would be acting pretty well. And you probably think it tries to go back and attack those highs. So again, not a big mover, but it is what we do here in sector situation. We're halfway through our mains, and then we'll go into a few more and kind of go into wrap up. Here's staples, which we're doing well, and you can see they are probably one of the more advanced ones in terms of this bear flag look that a lot of the former leadership sectors started to flash. And if I draw that sort of like that, just to give you an idea, you can see that's a little advanced because it is seemingly on the verge of breaking down below, which is the expectation for this kind of a bear flag. And if it broke down, you would expect it to trade down towards your 150, 100 SMA confluence down there, but just a little below 73. Again, not a big mover, but that is not acting well. You can see a lot of the short-term SMAs are starting to take a negative slope that goes counter towards other the longer terms, which are kind of flatlining. So staples look a little challenged. They've got downside gaps that can fill if we do get a bigger market correction to start the year or in at least the first quarter. XLY, the discretionary, which hasn't been doing that well, right? Even when a lot of other things were rallying back in here, this wasn't. And then as of late, you can see how poorly it's done. But last little couple days there, maybe a little window dressing, so it didn't get worse. Don't know. Hard to read a holiday, end of the year holiday situation like that, but not a lot to like. Long-term trend, I think you've got to wait as a counter trend trader, at least wait until you get above the 10 in white. If you get above the 10 in white, which is effectively like saying taking out Thursday's high at 129.80 in a strong market, maybe you do get a little pushback up because it did get beaten down for quite a while there. But outside of that, breaking down below the recent low probably sends you in a market that's selling off. Probably that means you're visiting the Bollingers down there eventually, down into the high teens, 118. So that would be quite a drop. And maybe that's the kind of move we need so that there's more cathartic action and a little bit of capitulation and so on and so forth, and then things get better. So that was discretionary. Let's look at real estate. Again, real estate, this is where, kind of majoring in finance and economics, like I'm glad I don't think of it that way anymore, but I can't understand the home builders and real estate catching this bid if I think about it logically. But just knowing the stock market, everything is just all about, for me, it's all about what the charts are doing and trading. It's really the charts. I don't like to try to force my opinion of the macro situation onto my trades, but there's another bear flag. And again, this bear flag to me makes sense because this finally lost its XLRE, finally, come on, think or swim. There you go. Yeah, this finally lost its support right there below that line. And now it's down here, and you can see all the SMAs are there. I think, this to me shouldn't be doing well. It shouldn't really have been able to rally 33% in 2 months or 30% in 2 months, whatever it was, or even less than 2 months. But that's the market, that's what we get treated to. And that's just how it is. And you're better off, instead of saying how stupid this is, and maybe it is, just trading it and making money from it. But this doesn't look good to me. I think the first sign probably would be below Wednesday's low. Get below Wednesday's low. It's going to put you somewhere near the bottom of this line I drew, and that would put this at jeopardy of revisiting lower support levels. So keep an eye on that for that reason. But that's starting to kind of, I think, in my book, reflect reality a little bit more, that the real estate scene is, from what I've read, is not very good right now at all. So here's another one, right, that also lost support in form of the materials space, XLB. We'll just put a really loosely drawn support line on here. Nothing fancy. It loses, let's say, support there. All the SMAs that are short-term begin to roll over, struggling to get back above them, can't do it. Even the 10 was keeping it tamped down. The 200 kept it tamped down, not acting well, left a gap here. So should this trend lower? I mean, I think it should. I mean, I don't think, given the geopolitical developments, I don't think the China coming online thing is this big trade. Personally, right now, I think there's so much propaganda to sort through. I'm not really sure exactly what's going on there, but this to me looks concerning. I mean, I think it's clear that when you're below that 100 SMA there in the dash white at 76, call it 25, ballparking it, that's when this would be really in jeopardy. And the next leg of the maybe after this sort of bear flag or consolidation breaks down, you'd get another leg lower, which would probably at least take you to there to try, or near there, I should say, try to close that very obvious gap. So that doesn't look good. You probably have to wait until getting above the 200 in purple or below the 100 to trade it in a big way. Could you get singles between the 100 and 200? Sure, you could. Maybe a double? Yeah, sure you could. If you get the right options, you use short-term front week options, you catch good moves. Not a big trader, but I'm just saying, just for the record. XLI Industrials. So XLI, another one with that has gone into consolidation after being really strong. The 50 seemed to matter there in gold, kind of held there or near there, just above there. Clearly, right, losing that Wednesday low again, which is very similar to the Friday low. Losing those lows, that would definitely put it at risk, I think, of visiting this 100, 200 confluence area down here. And that would be a problem for it, and then of course, down below there, you only have one more SMA, then you have to start looking at flat lines. But if it really breaks down, I do think you could see a visit to that 150 at about 93 right now, near 93 right now. But that is looking breakdownish, losing the short-term SMA support. Short-term SMAs are rolling over. That is a little bit more in bear control at the moment. It's on the verge of really being in full bear control. So just be careful on that one. XLU. We take a look at this one usually just to be thorough. It's the utilities. There's not a lot of people that love to trade in here for the obvious reasons, but I don't see anything there, right? I think it's very obvious what you need to do. You take out the high there and they're rallying utilities, you could go with it. If you start losing the 50, then that probably means interest rates are going up and the whole market's under pressure. And then this thing could itself, of course, come under pressure. So that's a look at the mains that we cover. Excuse me. Let's look at another critical one that I don't keep on the 12 name grid, which is SMH. And SMH is interesting in that I think the bulls came back in a big way. And I think in a big picture way, in a weird, maybe it might sound weird, but I still think the bulls are in control here overall right now at this very moment in time. And I do think this has something akin to a cup and handle. Some people would say it doesn't. That's a whole nother matter, but I still see something akin to a cup and handle there, which is a pretty good pattern. It didn't fire. In fact, it faked people out, which is what we said, beware of big patterns that are obvious that seem like they're firing. And if they don't fire and hold, they can get reversed pretty hard. And that's what happened here, right? That's why I think it's good to keep an eye on patterns, because they can either go in the way you expect, or they can lure people in that are watching it and waiting for it. And then really that can hurt people. And if you don't get out, if you're long, you're in trouble. And if you realize that they are in trouble as a neutral, you can become a short and do quite well, clearly, right? So that's the mindset, I think, that you take into these things, knowing that I always know when I'm trading a breakout that it might be a false one, right? It's just built into the DNA of how you trade these things. And that's why, like, I always argue in favor of a quick little trim, just because if it does reverse down to your breakout level, if you've trimmed, say, 2 or 3 contracts, then you can still eke out a small profit and not kind of psychologically say, oh, that stunk or whatever. You just get out of it. It's over. It didn't work as well as was hoped for, and I'm ready to maybe even trade it to the other side because it's a false breakout. So anyway, that's my thing that I harp. Some of these things I harp on, but right now, right, I think you've got to say Thursday's high or Wednesday's low, and I would wait and let it tell you what to do. I mean, I think the market is in a tough position to call for the second week in a row, and I think we're just going to be better looking for singles and doubles until the market starts to show its hand a little bit more. So that's where I am on that. But I do think cyclically, this is in trouble in the short term, but I still think bigger picture, it seems like some bulls may have come in here positioning for the economy, everything to start improving again, whatnot. And there's some big money, I think, that went into this thing. So I just want to be clear on that one. It's an important sector, obviously, probably maybe the most important one. Housing, just kind of dovetail this with real estate, XHB, right? We've been saying, what's up with this? It doesn't make a lot of sense, but again, not fighting against it. I think this is clearly another fake breakout. They crush people. This is what they do. And now you're on the verge of reversing lower. I think if you close below Wednesday's low, this gap should close for sure. Can't say 100%, but you get the idea. I'd expect that to at least drop to there in a heavy market. And then from there, we'll see. But yeah, there's potential for this, I think, to drop back down to the mid 50s if this low gets broken in a heavy market. You can see there just wasn't a lot of interest of late, right? It's consolidating. It's right between all the SMAs. Let it break, right? Let it break one, get above the 20 there in blue, light blue, or below this low here, and you might have something. And then again, you've heard us say this, but we don't often settle for the ETF, right? We would rather trade individual names within these ETFs. So go look at the top components and see which ones you like or dislike the most to be a bull or bear. And then, I would go with those if you think the charts look better. If you don't think the charts are differentiating themselves enough, then maybe you consider the ETF. But usually you get bigger moves out of your individual names because news and upgrades and things like that can develop that are not necessarily sector wide. So things like that anyway. But here you are. I mean, really, right? What do you say about gold and silver right now? Well, I mean, I think the bulls are in control, big picture still. I'd give the bulls the benefit of the doubt. It did do that old textbook, fail the first couple of times trying to get above the purple 200, come back to it, test it, held. But now it needs to start going back up. It wants to make something out of this. And if it doesn't, if it starts falling below the 200 and all the SMAs there, I think you've got to be on the lookout that it at least holds there, which would probably be the 50 that's rising right now in gold. So let's call that 115-ish. If it starts to not hold 115, which means that it would lose the 50, it would lose this low right here. Not good, right? Especially after what we're looking at down here, which is RSI higher, right? This RSI lower, this higher close, but still an RSI that didn't really break out and finish in a convincing way higher than this one, and is certainly lower than this high. So not good, right? Kind of looks a little worrisome, even though I think bulls are in control. Don't forget, this is a very tough sector to trade. There's a gap that it left here. It disappoints bulls a lot. It really does over the years, over the decades. Metals traders are their own kind of breed. It is what it is. You've got to call it like you see it, and just a tough thing. Overall, it's still bull control in my book, but it's getting a little worrisome, and I would be ready to hedge if I'm along. I happen to be along in this sector, but I'm a long-term player here, so I'm not that worried if it backs off a little bit. And I'm doing it as more of a hedge than I am like an aggressive money-making trade. It's more of a long-term hedge play for me, just to be very clear about that. So we also look at the dollar. Let's take a look at the dollar. We'll take a look at TNX. We'll take a look at the VIX, a few other things. Dollar, right? This should be good for stocks if this dollar continues to go down. And I think right now we thought that maybe this could hold near the 200, maybe try to start working up. Didn't happen. Breaking down again. So after all the overboughtness we saw in the big picture charts, this lost the trend. Dollar's been getting rocked ever since, right? So until this pulls out of this, it shows some life. I think you've got to stick with that trend as of now. That can change quickly due to geopolitical, as a lot of you know. But if you look at the chart right now, I mean, I don't think there's a lot to like about it. It's showing a fresh breakdown out of that little triangle that we drew. So I can't be on board with being a big time bull in that yet. Needs to do some work before I can get more constructive on it. Here you go with the yields. Yields, on the other hand, are still trying to work their way back up. We're just looking at the 10-year yield. So this is doing a little bit better. Maybe you come back to really the breakdown level at, if it gets back above 4, we'll see. But it's, the yields are still climbing. They're backing off a little from the surge that they had. Probably have to see if they hold if the yield holds the 50 and then starts to reverse back up. But clearly this would be a lower high, right, for yields if it can't hold the 50 and then rolls back over again towards those lows. So that would be yet another lower high, which would be our second main lower high, I think, visually right there. Let's take a look at the VIX. Now, everyone likes to look at the VIX, but it's, again, a tough one to chart the way you would a normal security, because it tends to be mean reverting. It tends to have its cycles, right, where it's sort of completely out of favor and no one cares, and then suddenly everybody cares. But tough one right now in this fact that you've got the higher low right there, and you've got you're getting down to low levels, and it's been here for a little while, right, kind of towards the lower part of this range we've been charting for some time. And so this, excuse me, this looks a little bit like other times where it tried to start working its way up, had a little pop, pulled back, and so on, and then eventually worked up. Maybe some of you see a little similarities in here with what it's trying to do. I don't see anything incredible right now. Probably, right, you'll know if it starts doing something very powerful on its own, that can be interesting. But if it does it with a story, right, there's a big story that develops or a news driver, then you have to decide, well, is the VIX reflecting that that's real, right? That that's a real problem. Seems like a real problem on the surface. Is it a real problem? Well, if the VIX is treating it that way. But remember too, we've noted this, that there's a lot of speculation, thought about why the VIX has been so subdued, despite some of the scary times we've seen to the downside and some of the volatility that we've seen. And there's a lot of people out there looking for all kinds of angles on this. I've read a lot of it, not all of it, I'm sure, but there's different theories as to what's happening here. But it's not acting maybe the way that we're accustomed to it to a T, that's for sure. But I don't see anything that's currently telling me this thing's about to explode. Clearly, right, if they decide to come in to sell stocks, we all know that more than likely that'll bring the VIX up. I don't know of any big news driver over the weekend, the long holiday weekend, that should send the VIX up right now. But I do think look out for emails from Market Rebellion, because Ryan is going to be hitting on this pretty hard at the start of the year in terms of volatility, special, I think, classes on this, various ways to hedge, the pros and cons of hedging this way, how to unhedge, you know, all kinds of things like that that we think are really important, because we think 2023, at least Ryan and I think 2023 will be similar somewhat in terms of volatility to 2022, where you'll have opportunities, we think, on both sides of the market. Maybe we'll be wrong, but we just don't see all down. We don't see all up. We see a really kind of combination of strong moves, again, much like 2022. I'm trying to think if there's anything else. Oh, we've been charting. I don't want to go into all the other ETFs because I don't think they're doing much from what I saw earlier today. Oops, I meant to type CL. Let's take a look at the crude. And I guess it didn't take the slash. Slash CL on Thinkorswim. But this, come on, boy, it's taking a while. This, much like the XLE, we've been waiting for something to give. XLE, that finally had a little bit of a drop. And here's the crude itself. We were saying they kind of need to come back together, right? They're kind of spread quite far apart. And this is trying a little bit. So I would look, if you want to chart this, I would look for that 50 SMA there in gold. And we switched over to percentages, so let me switch it back. I don't know why it does that to me so often, but that's probably it. You can see right near there's been a really big battle zone. Probably 82-ish is a level that maybe lets it release and try to go higher. And some people might say, well, hey, I think there's a little mini inverted head and shoulders that's in there. Maybe there is. But right now, I think that's looking a little better. We've waited for that. XLE is looking a little bit better. So, that they're both kind of, instead of being strongly at odds, they're both, I think, a slightly more bullish, although I don't think they're out of the woods yet. They need to pop to really fully cement the overall bullishness, but I think they're still a little bit more bullish than bearish, is my take on it currently. Let's take a look at lumber. We thought that XHB, housing, real estate, looked like it was vulnerable due to bear flags. Let me see if I can do LB something to get lumber in here. LB, and yeah, this rolled over. So again, we'll have to see maybe how this opens, but this didn't trade all that well, right, to end the year, and this trend has been down for some time. And I think someone I read said we're finally back, and I don't really chart it way back. I just kind of look at what we're seeing here in the near term, but this is maybe back towards where it was before the COVID-19 housing boom really launched. So not looking good now. You got to wait and see for this thing to get above that 20 in a convincing way. I think you just got to keep your eye on that. If it stays near here, if it continues to drop, we'll just have to pick a new level for maybe a turnaround from it. We'll see what happens there. How about what do you think? Copper. So we looked at lumber, we looked at oil. Excuse me. Let's see what we can see in copper. And I don't think this was doing much. Let's see. Not doing much, but excuse me, you can see that this is really, this triangle stuff we were hinting at before is getting there, right? So I think it looks like this thing should try to, getting close to the apex. I think this should start to do something one way or the other. Which way, as of now, you have to say longer term trend is down, but intermediate term trend is up. So those trends are at odds. I would say that this is looking more constructive to me. I think, right, you've got to just say, well, they've got the higher lows, in there. They're kind of flatlining on the highs, though. They're not able to, but that's really the definition, right? More of an ascending triangle, which is theoretically, right, with the incoming trend being up, that should be a bullish sign. But I think obviously, right, you've got to at least wait for the 200 to be taken out there in purple. And you could, probably really want to see new highs get made on a closing basis. And if that does start to go, it would probably start convincing some people that things are just getting better, and maybe they really are. I don't want to just go on my opinions from reading, but maybe they really are, and I would just trade it that way. One other last thing I could check out for us, see if there's anything interesting there, would be the XBI, the bios. Sometimes they have news at the near starts of the year. I've noticed that a little bit. I'm certainly not an expert on that space. Flatlining big time, right? You can see what kind of if I don't remove things, you can see what kind of a mess develops. I probably should be on a different chart, but I don't know if I have anything that's going to take away no, it's all going to be messy with all the drawings, but you can just see, even though it's very busy, and I apologize for that, you can see how busy this is. You can see how we've been stuck in a sideways consolidation. And again, I think you're back at the point where you're just waiting for a new high, or you're waiting for a new low and maybe trading it that way. And probably, right, you want to be ideally, you really want to have the markets win at your back, bull or bear. But if the market's dropping, this is breaking down, I'm going to trade it as a bear if I'm interested in this sector for whatever reason. And the converse would be true. But I don't really, there's just not a lot to go on there. I think it's probably overall, right, it's usually a good thing when you've consolidated after you've had some kind of a run, and it did put a little run together, and it has consolidated for a while. So I guess I would give it a little bit more benefit of the doubt as a bull, but I mean, clearly it's not worth it. I don't think it's worth pushing anything heavy in terms of a position anytime soon. You've got to see this thing start to make a meaningful move. And don't forget, just because it takes out a higher low, don't forget your job as a risk manager is only just beginning, because you've got to make sure that is not a false breakout. So again, that's where your little quick trims that I talk about can really come in and help you, I think, psychologically at the very least, to say, hey, look, I made a little money. Let's see what happens. If it goes back to towards that breakout level that you got in at, you maybe close out the rest, set an alert, and get ready to do it all over again if it starts acting better. You know, that's always better than seeing something that was a small winner turn into a bigger loser. That's something that I mentioned at the end of the macro measure. I did see a lot of comments from people that were trading this year, and they all seemed to note something, which I completely believe, is that they looked back at their trading, which is really a great thing to do, to sort of assess, you know, what happened here. Let me look into this more deeply. And they realized that if they had just remained disciplined about taking their losses or getting out sooner, right, when they knew they should, they would have done far, far better. And so if that's something that you've struggled with because you're on the newer side as a trader, that's something that's, I think, critical. We talk about that in Market Rebellion all the time. We use the acronym DDA, which is Discipline Dictates Action, which I think Pete picked up from Lou Holtz, the coach. That was one of the sayings that they would repeat, right? That you've got to do what you've got to do out of discipline, and knowing that the market's very tough, it's very dynamic, it shifts a lot, it can trick you, it can lure you in, it can then wreck you. Knowing how it can be very, very challenging, and it can also be full of, you know, mines, if you will, or pitfalls. You've got to do what you've got to do. And then, right, if you do that, you do disciplined things. I would love to keep regretting that I keep winning, but I'm not winning as much as I could have won, right? But that's a great sign of progress. If you're struggling and you're newer to trading, it's all about what people say. Really, everyone says it, but it's because it's true. It's if you realize that this thing had its chance to run for me, it didn't run when I think it should have. It's not acting well. And now that the market's starting to go against me, the stock's starting to roll over, I'm just going to either hedge or I'm going to get out. You know, that is such a big deal to be able to do that. But it's a hard thing because a lot of times people put a lot of effort into their analysis, and they have invested into it psychologically and in terms of time and energy and effort. And they don't want to give up on that prognostication, right? That call they're making. But that's the market, right? Sometimes we're right in the end too, which is even more frustrating, but our timing was off ever so slightly. There was one more little wiggle or waggle they threw at us before that big move we were expecting began to unfold. But again, that's where your discipline is going to come back, and really it's going to play out for you. So I want to wish everyone a very happy new year, a healthy new year, a safe and prosperous new year, really a wonderful new year. And we'll be doing these, of course. I've been thinking more and more about the formatting on both videos, and I really think I might just do something that is very methodical, maybe with a little bit of a summary, and just kind of go at it from there. We never really settled on what we wanted to do, which is why these tend to be longer. But a lot of people have said they like that we cover a lot of different things, and sometimes these things we're looking at just really for educational purposes can turn out to be trades for them, which is why we use the major index ETFs and we don't chart the cash indexes, just so you're clear if you're new to this stuff. But again, I want to wish everyone a great new year. Thanks for tuning in. And I'll see everyone during the live stuff in Rebel Pit, UOA Pro, and all the other services that we all work on for Market Rebellion. Everyone take care. Thank you.